Hello there, my friend. Well, hello there, my friends. I think we now are live. Chris Mark is here with you for Arcadia Economics. We have interesting technical situation. I actually do have Phil Kennedy and James Anderson on there. I don't know if it's going to happen that you're going to get to today, but they are there. And folks, if you have any questions out there, we will be taking them. So feel free to start firing them in. Phil, can you say hello to our crowd, even if they can't see you? Hopefully they'll be able to hear you.
Yeah, what's up, guys? February 4th here. A lot going on, especially in the fake markets, the tech markets. We'll get into those. Good to see and hear everybody.
Yeah, and Phil, it's amazing. I guess we don't have a screen share here either today. So, folks, I appreciate your patience. We'll hopefully next time have this a little more streamlined, but we're getting there. And in the end, you can ask your questions. Dean Gold, thank you for logging on, my friend. And we'll get to that question in just 1 second. And James Anderson is logging back in and will be joining us too. So, wow, it's great. Rob P., we're going to get to that one too. As soon as James logs back on, I have my witty insight of the day. James, are you there?
Yeah, I should be, Chris. Can you hear me?
I can hear you. If any of our kind audience out there, are you able to hear James and Phil all right? You could leave a comment in there and hopefully you can hear them coming through. In either case, we'll make things work. But again, I am joined with Phil Kennedy of Kennedy Financial, James Anderson of SD Bullion. And folks, I think we can dig almost right into the questions, but why don't you guys just real quick let folks know a little bit about you for anyone who isn't out there watching and knows you already. Phil?
Yeah, so good morning, good afternoon, wherever anyone happens to be. It's lunchtime here on the East Coast, so it's a good time to talk about silver today. Thanks for having me on prior episodes, Chris. As folks know, I'm not necessarily the silver expert who comes on your channel. I'm the guy who talks about financial counseling and how that pertains to just the emotional aspects, the emotional and psychological aspects of investing. So that's really where I come in with all of this. There's a tendency for people to want to buy things high and sell them low. And that's really why it's a perfect time to be getting together, because all the Tesla fanboys are opening up a Robinhood account for the first time and piling in to this already very overbought stock. So we could talk about some of the things that are still cheap out there, like silver.
And Phil, we can talk about gold today. I know I'm getting myself a reputation for being just silver, and the gold question's fair game. So thank you for joining me. And James, can you say hello to everyone?
Yeah, hey, Chris. Thanks for having me on your show. It's exciting to be live on Arcadia Economics. First time I've ever had the privilege of being live on your channel. So kudos to you for doing this. I think people really do enjoy the interaction. And so I'm thrilled to be here. I've been, see my background here is I've been in this precious metals industry since just before the 2008 financial crisis. And so I've got, about a dozen years of experience in it. And what I'm focused on right now is helping SD Bullion with their content and research and marketing, et cetera. So, I personally invest a lot, probably more than I should have, into silver and gold. I probably have more aggressive position than most people out there, but such it is. And that's been the case for a decade plus. So I've kind of gone through the highs and lows. I saw silver run from 9 to 50 and was buying throughout that time and held ever since. So, my longer term, I'm sure we'll get into this discussion, but it's good to be here. So thanks.
Well, appreciate having you here, James. And maybe one day it'd be fun to talk about which one of us has gone more recklessly overboard. And I'll tell you the story of what I did when I left Wall Street, what my allocation looked like. I think it was above 100% towards metals, which again, I don't recommend, although one last group I'd like to welcome on in and thank is our audience, because really without the folks out there watching, there's probably no point of doing a show. And would like to mention, just hasn't been the easiest time lately to keep the show going, although really getting the feedback, the comments from everyone out there, seeing that people are appreciating, what we're doing at Arcadia, and as well as Phil and James, does mean a lot. So I thank you for that. And it's nice to see we already have so many comments. So rather than, we're going on rambling, let's start getting to those. Although, Rob P., I got to pick you first because goodness gracious, Tesla, I wish I had the screen share enabled today. I apologize, we don't yet. Let's see where, it is absolutely insane. James, I think it was you that I was talking with maybe 2 or 3 weeks. And I think you said, Tesla was up around $400, which I corrected you or whoever it was saying, no, it's over 500, which I had been stunned by because I just looked at it previously. The last time I had followed it closely, it was in the 200 range, which was only 3 or 4 months earlier. Today, it is up $124 to 904. So often you hear people talk about markets going vertical, although I just did an interview with Peter Spina, and we came up with the phrase when something goes Tesla instead of exponential or vertical. Anyone? So James, was that you? And any thoughts on Tesla?
Yeah, it was. And it was probably just over a year back when I sat down with Dave Kranzler, because I know he's a very vocal critic of Tesla, and picked his brain about Tesla. And, I don't do fundamental research on Tesla stock. I just love the controversy out there. There's a huge camp of avid people who think Elon Musk can do no wrong. And then there's a huge swath of people out there who think it's essentially a fraud on wheels, and that it's ultimately going to crumble. And truth is probably somewhere in the middle. But I'm not a fanboy at all. I kind of don't really. I think I'm more turned off by him as a person and his personality, and just the sycophant nature of that whole thing. It just, for me, it's people who act like this if they know everything and act as if they just because they're talking, it's genius. I find that to be a turnoff. So I think that's more or less where I come from, and then just seeing where the stock's going now, and the fact that it's obviously more expensive than Volkswagen, or it's probably going to start threatening the total market cap of Toyota, which is the all-time best brand of car, in my humble opinion. So the whole thing's ludicrous. It's in line with the mega tech stocks. You're talking Google, Amazon, Facebook, what else? Netflix. I mean, these things are just so overvalued. And someday, 10 years from now, we're going to look back and shake our heads and think, well, what a bunch of morons. How could they have ever valued things at these levels? But that's not the case right now. We look like fools. We're the ones with blood on our face. So be it.
Yeah, and it's interesting to mention Musk, certainly either a genius or something else. We actually did do a call about Tesla with Dave Kranzler a year ago on my channel. And if anyone wants to look there, there's a fellow named Adam Aardvark who's been commenting some interesting perspectives. And if you want to take a look at that, you may find it interesting. Although we will keep rolling here. So I'll start from the beginning. And guys, we're getting a lot of questions here. So perhaps we'll start with some quicker answers so we can catch up at least. Dean Gold asks, will the reset bypass gold standard and go straight to digital? James, I'll send that one to you, since James, again, is with SD Bullion, a place where you can get good pricing on your metals and buy physical gold and silver. So James, what do you think about that?
Yeah, that's pure speculation. Nobody knows. I think if you look back at history, as far as human beings and cultures and times, you have swings from fiat currency that ultimately goes astray and goes wrong, and then a swing back towards sounder money. So one can hope that we are going to be going into a situation where we swing back towards sounder currencies. But I'm not I'm not extremely hopeful that the powers that be are going to want to swing back towards sound money or some type of system that requires responsibility and being disciplined. I'm not necessarily confident. I think what they'd like to do is swing it toward a system where people have no idea what real value is and are completely lost, even more so financially than they are today. I mean, people financially are about as illiterate as they've ever been, probably, in terms of the mass of humanity. And my contention is that that's what they'd like. Powers that be would prefer it that way than having citizenry knowing what's going on. So people out there who are buying bullion, this is a small cadre of people at the moment. But my contention is that, and we're going to walk into a currency crisis at some point, or some type of financial crisis, where faith in central banks, their ability to prop these markets up where they are right now and keep propping them up, all that stuff's going to start waning away, and it'll feed into bullion values rising. That's just my contention. I'm not necessarily sure how that's going to play out in terms of systems. But one thing I do know is that if you own bullion in your hand, it's about as private as anything you could ever own. And that, for me, is one big sales point as to why having a prudent position in bullion that you own directly and outright outside of the financial system, I think makes total common sense for the long term.
That makes sense to me. And Phil, I know you get a bit more into the cryptos, so I'm assuming that's what Dean was asking. I felt that there will be some combination of the two. Again, I don't know if I'm the world's biggest silver bull yet, although I keep thinking that if you want to buy something from Amazon or you need to send an invoice to someone in China, there is that element. Do we shave a little fraction of a silver coin off, put it in the mail? So, Phil, what do you see happening there? Is it going to be a combination of the two?
Well, back in 2016, I really did start moving over to the cryptos. I'm way more allocated there than I am in silver. And that's just because I got tired of the fraud and manipulation, the phony paper contracts. What are they, 300 to 1 now? If everybody showed up collecting the amount of silver they thought they were owed, that there'd only be 1 ounce for every 300 people. So that's really what moved me over to the cryptos, because you can say a lot of bad things about the cryptocurrency space, but one thing that it has going for it is a lot of transparency in terms of the individual blockchains. I mean, I can go look at Litecoin and Bitcoin anytime I want and see the coins moving around and see which wallets have them and which ones they don't. And that's the upside of cryptocurrency, is that we know that no one will ever get away with selling 22 million Bitcoin short, because they just don't exist. And that's really, I think, the battle we've been facing in the metals. As Bill Murphy has said, the U.S. government would rather turn over its nuclear codes than tell us what the real price of gold and silver should be. I think they should be exponentially higher. I think we should have $10,000 gold at this point, $500 silver. It'll get there one day. We're already starting to see different spots around the world. You had Germany just a few weeks ago rushing to buy gold as draft bill threatens to restrict purchases. This is what the powers that be do, right? They pull out another rabbit out of the hat to try to prevent people from buying sound money. Let's funnel them into Tesla stock. Let's get them opening a Robinhood account. Hey, you don't have to buy a full share. You can buy for as little as $1. You can buy a fractional share. So to me, we don't have, as Bill Murphy's colleague Chris Powell says, we don't have markets. We only have interventions. I'm putting something up on my screen over here on my channel that folks can see. Just a few days ago, we had the president saying, we have to protect Thomas Edison. We have to protect all of these people that came up with originally the light bulb and the wheel and all of these things. And he's one of our very smart people, and we want to cherish those people. And not talking about Elon Musk. Well, not a coincidence that just, a week or two later, Tesla has pumped like another 50% and it's up 100% in a month. So these are, I think, end of times as far as a bull market goes. Sven Heinrich, however you say his name, said, hey, look, there's always a poster child for these bubbles. And I think it's going to be Tesla. One more thing I want to add here, folks, again, over on my channel can see we got Charlie Bilello. Everyone should follow him over at Charlie Bilello. He put out, hey, revenue over the past year, Tesla, 25 billion, GM, Ford, Daimler combined of 620 billion. But Tesla has a higher market cap than GM, Ford, Fiat, Chrysler, and Daimler combined.
Yeah,
So,
I did.
to me, you know what? Buy an asymmetric asset. Get your hands on physical metal that, as James alluded to, it's very private. No one can take away. It's in your hands. And buy it when no one else wants it. And that seems to be now.
Yeah, good points you mentioned there, Phil. And actually, I was writing a note down. Perhaps next time we do an interview just with you on the show. You mentioned that you can't sell cryptos you don't have, although I would love to talk with you another time about that story where Christopher Giancarlo of the CFTC was bragging about how the Trump administration, along with Steve Mnuchin, Gary Cohn, and I remember I'm like, Gary Cohn, that name sounds familiar, arbitrarily decided, according to Giancarlo, that Bitcoin was the first bubble since 2008. So they took it into their own hands, which can we translate that as Goldman Sachs, to invent a futures contract to lower the price, which, again, that's a whole show in its own right. Although certainly, and I see we have a comment that the cryptos are manipulated from Jane Reynolds. Jane, I do certainly agree.
Yeah, every market in the world's manipulated.
Yeah, by all means. I know people say, well, let's talk about silver being manipulated, aren't the other ones? I guess the one I think of, the bond market, is openly manipulated by the Federal Reserve. I mean, to me, that's market manipulation. They just call it policy. Hope everybody thinks that's normal and plays nicely. So, Phil, we'll mark that down for our next call. It would be a fun one to dig into. But let us keep going because we have a lot of great comments coming in here. Winslow CNP says a question about options. I don't think you're ignorant about options, Winslow. It sounds like if you're asking questions and learning, that's always a great formula. Is there a way to tell how long a short contract is in place? Expiration, silver manipulation question. I'll take that one if I may, as my background was as an equity options trader. Certainly, like in a situation like Tesla, you know, we recorded a call with Kranzler of how to short a bubble. Certainly, if you just went outright short it, not the most fun day today. Although what I've liked doing at times is taking educated guesses with buying a put where your downside is limited. So, for example, today, if you think, you know, and there's something about my intuition, this by all means is not legal financial advice, but just when I saw it was up that much today, there was something made me, my instant reaction was, gee, are we about at the end? Which, you know, maybe it'll be $2,000 a share tomorrow. But taking some educated guesses, certainly on days the metals are down. And Winslow, I'll put this link in the window if I can get it in there. On my YouTube channel, there is a playlist where I walk through how I look at using options on the metals. Actually, fortunate have been talking to my former futures and options teacher, who's a quantitative genius and has been building models. And when I laid the silver thesis on him, he was quite intrigued. So we actually are building an option model that basically looks at how to type that in there, option model. Basically how to look at it is using it as insurance if you're buying upside calls, or you could do the inverse on stocks like Tesla, where how do you have something in place so you hedge out the time risk and can see when, you know, so if you don't know when it's going to happen, but, you know, some of the multiples get wild where if you are of the school of thought like myself that will see $50 silver, you know, and you buy some cheap upside call options on SLV or a minor, you know, all right, maybe explodes this year and you win big. If it doesn't, you can say, all right, fine, I put 1% or 0.5% of my capital in there and fine, they added more paper to keep it lower. I'll just roll it over the next year. And at least before the rally of last year, I'd mapped it out where you could have had the thing on for 20 years. And if silver hit $50 in that period, you'd come out ahead. So Winslow, the link is in there. And again, we did record a call about the option model. If anyone would like to email me through the site, would be happy to send that to you. I think it's some interesting stuff. So continuing on, goodness gracious, Tesla. Yes, Rob P., I certainly agree. And maybe someone should go in over to the Cranslow cave, check in, make sure he's all right. I can't imagine he's too thrilled today. James Burkhart Doms writes, when will silver break out?
Burkhart Doms. I first and foremost am keying, I think, silver more so off of gold. So I'm paying more attention to gold at the moment. And just technically, when I look at the chart of gold, it just looks like it's creating a basket type shape where in technical analysis, when you're looking at the long-term charts of it, it looks like it's simply climbing a wall of worry at the moment. And so, there's people out there who think that it could pass the old 2011 high later this year. That means going beyond 1950 roughly into 2000, threatening there. I'm not necessarily sure if it's going to happen this year or if it'll be coming years, but I'm certainly confident it's going to pass 2,000 fiat Fed notes per troy ounce sooner than later. And when that's happening, I would imagine the gold-silver ratio is going to be tightening some. Silver has resistance roughly in the low 20s. And so really what you got to do for silver is you've got to get it above 24 to 25 to 26 area. Once you start going into that area and get beyond that, it can really run quickly. If it gets beyond 26, you could gap up very fast and start looking explosive to the upside. It probably won't be that long of a time frame once it passes 26 to get back threatening in the 40s and up near 50. So it's just one of those things you kind of want to be ready and have your positions settled before that time comes. And my guess is the time comes in the next few years. It's just a matter of kind of waiting out this present internet bubble 2.0, just kind of waiting to see what happens with the global economy and the recession and how the central banks react.
James, two quick follow-on questions. What you said there. Do you see it as a binary type situation where price will float around wherever it is, but whenever the manipulation or whether you just call it banks shorting paper that they can't deliver, and you see a short squeeze coming, so basically sit there and then at some point, it'll just be a lot higher. And along with that, curious if you've ever heard anything to the effect, by all means, I cannot substantiate this, just something I've heard that seems plausible, so phrase it appropriately. But I've heard people speculate that between that $20 to $25 range, that a lot of derivatives get triggered, and perhaps that might be why it seems like it's really been hard for it to break above 20. Any thoughts on either of those two?
So you got to remember, technical analysis is more than half almost of the derivative traders are using technical analysis. So it's kind of this strange self-fulfilling prophecy where if you can paint the tapes a certain way, then you can kind of get everyone thinking a certain way. And it has really nothing to do with fundamentals. Really, it has to do with, what's the chart look like? And we've all probably seen it. Anybody who's a big silver bull has seen the huge basket that it created from the high of 1980 to the high of 2011. We've obviously traded downward 60 some odd percent to now. But if you look at that, it looks like this massive cup and handle that's stretches 50 years. And usually that means that when it finally gets beyond its old, $50 threshold, and then it runs like nuts, right? Then it can jump from 50 to near 100 quick. So the question of how's the mechanics? How's this going to happen? It's a good question. I think that Ted Butler, he probably has a pretty good theory in the sense that at some point, one of these commercial banks may just be the first move and stop being the shorter of last resort and start going long in the market. What you'll have to kind of pay attention to is going to be margin requirements. What is the COMEX doing with margin requirements? Because a lot of times they'll jack those up, trying to clear away the froth and speculation that's happening. Because People who are essentially go long typically in silver derivatives are the smaller funds. They're not banks typically, but JP Morgan is possible at some point they may take the other side of the trade and start going long too. But that's when you start doing that, you are embarrassing the entire financial system. Essentially, you will embarrass central banks. You will embarrass the governments and the currencies they create. So if you are too big to fail, and you pretty much tell the government what's what, which is what JP Morgan has pretty much been doing the last 10, 12 years, it's quite possible they may at some point just be like, it's time to finally go long and take advantage of all the bullion that we've, essentially picked up in the last 12 years. Because it's not simply silver. They do have a lot of gold bullion that they take delivery of too. So I hope that's kind of answers the question. It's first and foremost, it's derivatives at the moment that really tell you and dictate you what the spot price is happening day to day. But at some point, there will be a move to physical. Just kind of look at the palladium market and see what's happening there. And that kind of foreshadows, I think, what we will see eventually someday in gold and in silver. It's going to be a little bit, but palladium is kind of the tell. It's the one that's showing us the future for the others.
Yes, palladium has been going Tesla lately, similar to how rhodium has been going extremely Tesla lately. And let's see, I pulled up the rhodium price. I'm seeing 10,525, which it's up actually. That might be up more than Tesla today. So, and appreciate what you mentioned there, James. Burkhart also asked, when will silver break out? I think you gave your view on that. I'll throw.
Yeah, I mean, I would just say the timing of this is all very, very hard to do. If anyone knew the timing of it, then you could go out there and make a boatload of cash. But I just feel like it's inevitable, given the fundamental factors of all the debt out there and all the promises we've made, and the fact that the government and the pension funds and all these different interests can actually fund it. So to fund it, you have to either A, default, or B, debase the currency. And I'm thinking the second one is going to be the one they lean on mostly.
Yeah, I think that's well phrased. If I may throw in my 2 cents there. Now, I preface this, when I was leaving the trading floor in 2012, I thought it was imminent then, and each year as it's gone by, I've been stunned. With that said, seeing the repo lines that kicked up last year, also seeing the rally in price, and how this is really in the past half year, the first time we had that pattern for years where banks get long, price goes up, banks get short, price goes down. I wonder if we're not seeing World War III underneath the surface of what's going on, especially you have negative yielding junk bonds. So again, I'm not telling anyone to go out and trade on this, although add in that there's some folks that I really respect that I've been saying, when's silver going to go past $50? And they kept saying one day, and hearing them change their tone, hearing whispers about the LBMA, I'll phrase it like this. I've started putting a few option trades on based on the belief that we could see something happening sooner than later. And I'll try to be responsible and leave it at that. So Ian Stewart mentions gold global production 2018 was 3,260 metric tons. Silver was 27,000 metric tons. This is a ratio of 8 to 1. And the price ratio is currently 89 to 1. Phil, any thoughts on that one?
Yeah, I've been looking at this since at least 2012, like yourself. I thought the end was near in 2016. So everything that's happened since then has just been astounding to me from a financial history point of view. But as I've done before on your show and other shows, I'll bring up the Dow Gold chart. This can at least give us some form of optimism. To me, it looks like the market peaked back in September 2018 at 22 ounces. We're now back down to 17 ounces, I guess right where we were in September 2017. We're not back to where we were when the president got elected. We need to get down to about 14 ounces. And then from that point on, I'm still adamant that we're going 1-to-1 at that point. There's nothing stopping it. The laws of economics are going to win. They can continue this repo nonsense and all that stuff. But it's going to happen just like it's happened in every other government throughout human history, because you can't sustain these economic interventions forever without a consequence. Eventually, there's going to be somebody, it might start with a billionaire like a Ray Dalio and work its way down. Eventually, you're going to have people taking a look and saying, gosh, gold and silver look a lot cheaper than this market. Maybe I should take some of my winnings off the table and rotate them into the metals. And as more and more strong hands do that, you eventually get to the weak hands, like the people buying Tesla today. And then, it's just a waterfall crescendo of selling. And that's how we're going to get to a 1-to-1 ratio. And then there's going to come a day when you, me, James, are suddenly turning around and saying, hey, you know what? Maybe it's time to sell. And that's going to be a clue to all your viewers and listeners. Like, whoa, if Chris and James are saying it's time to sell, and by that, then all of their friends and neighbors will be saying, hey, look, it's time to buy. And that's going to be a clue. We'll get to live through that one day. And frankly, I'm watching the Tesla chart today, just on this call, it's up another 15, 16 bucks. It hurts to watch something like that because you think, oh, what could have been, right? If I had just bought Tesla in 2011 rather than silver, boy, would I be sitting pretty. But, if you bought back then, you were buying insurance. This is the thing that James was kind of alluding to. No one knows where the top is because no one knows just how out of their mind your fellow American can get, right? I mean, what's the old saying, P.T. Barnum, no one ever went broke underestimating or overestimating the intellect of the typical American. I mean, that's where we're at here. I thought Tesla looked expensive at $200. That was $700 ago. So it's a bubble, and you got to look for things that are cheap. I'm still buying mining stocks and things like that. And I think there will come a day when we'll have a call like this, and it'll be up. You'll see silver up over $100 in a day, and it'll be like, whoa, it's time. It's time to get out of this market, fellas. And I'm looking forward to that day.
Well, you and me both, Phil, and I think a lot of the folks watching, we actually have a bunch of people viewing the live stream, and I'd like to thank you all for being here. Want to keep getting to all these comments that are coming in quickly. Rob P says, great show and great theme music. Thank you kindly, Rob. Do appreciate that. I know we get some comments. Some people can't stand the song. Some love it. I'm a little partial to it. It was part of an album I wrote back in 2011, shortly after reading Atlas Shrugged, and kind of came out like Pink Floyd's The Wall mixed with Atlas Shrugged, but played by a jam band like Fish or String Cheese. So, James, I sent it over to you a couple of weeks ago.
Yeah.
I hope you get to check that out one day.
That was cool. It's always cool to learn more about the people that you interact with on a professional level and learn a little bit more on a personal level. So it's good to know that you like music, and those are some good bands you just mentioned.
Well, I appreciate that. Burkhart also asked, what do you think is the real value of silver? Phil, I heard you mention the $500 number. James, if you want to give a real quick comment on that one.
I've actually made a video on this a while back when I was doing Friday videos for Silver Doctor's YouTube channel. I've since moved over, and now I do SD Bullion's YouTube channel videos every Friday. And I'll probably make one soon, but it's just simply Google search when to sell silver, SD Bullion, and you'll find the blog post in the video. And it's, I gave away a couple things of thoughts that I have regarding when will it make sense to probably be moving some silver into something else. I'm not saying you simply sell all your silver, but it's kind of like the way that you acquire silver bullion or any of these other precious metals or mining shares, et cetera. You don't do it all at once. You kind of dollar cost average in, and I would suggest you do the same on the way out. And so the video, probably the key tenet in the video is looking at Google Trends will be a helpful factor. If you start to see, just go to Google Trends and look up Bitcoin price, for example, and just see that massive spike when Bitcoin ran up to its all-time high. At that point, you had a lot of people kind of like Tesla right now who probably were buying Bitcoin, assuming that it was going to go up forever. And this is just as old as the hills are. I mean, this is just human psychology. It's the FOMO factor. It's the fear of missing out. The same is going to happen to precious metals. It could be happening in palladium at the moment. Palladium probably has more upside because they just simply don't have the supply, and it looks like the lease rates keep blowing up in London. So my hunch is that palladium will keep rising. It's not that I'm betting in palladium myself. I'm betting more on silver and platinum and gold, but that wouldn't surprise me. But this is really about human psychology, more so than even trying to value it based on all the goods and services in the world, all the assets one person could actually buy if they tried. I mean, to do that would be impossible. You literally have to be omniscient to come up with what silver truly should be valued. Value is an arbitrary thing that we construct as human beings. So you have to understand more so crowd psychology. But when is it fair value? Maybe when is it overvalued? I would suggest start unloading when it gets near fair value, and then as it gets crazier and into a bubble, then unload a little more, et cetera, et cetera. That's essentially how you trade a bubble, or a bubble that's forming. And I do think silver eventually will find its bubble time, but usually historically silver's bubbles, they last very short time frames. They only last half year to a year, something like that. This one could be longer, but my feeling is that once we reach fair value and start going into bubble territory, it won't be long before it comes back down.
Yeah, and I'll touch on that. This is real scientific analysis I'm going to offer here. My general thought is that it came down to me that in 2011, when silver hit $49, I think people were buying for logical reasons. And either the price went down because the banks committed a felony and hammered a lot of paper on there. And if that's the case, I've always seen $50 as a floor. If there's another explanation, then perhaps I'm wrong there yet. Spent the past decade trying to see if there's anything I'm missing, which I have not been able to find. So we'll continue on.
So one thing, Chris, just to add to that is, if you look at the margin requirement history, you had to have, like, I forget, off the top of my head, it was a lot of currency to just control one COMEX silver contract. And I think it was $25,000 just to control one silver contract. And I think at the moment it's like just below $5,000. So that's one way that the COMEX will squeeze out all the longs because their pockets aren't deep enough. JP Morgan may have been sitting on billions in losses at that moment. Yet unresolved, they kind of squeezed it out, waited it out, and had the market turn, and then they made a lot of money on the short side. If you're on the short side with silver from 21 when they took over Bear Stearns down to 9, that's billions and billions of bonuses for the people at those desks that are now charged by the U.S. Department of Justice, many of them, for fraud, essentially. So, look, it's when I look out and I look at the different, I've shown you the East-West trading of silver over the entire full fiat currency era, and the East line right now is nearing $100 for the 1970 to now present value of silver traded in the East, $100 per ounce currently. You look back at 2011 and you base it on how much inflation's already been infused using shadow stats or any of the other people who actually track inflation more accurately than the Bureau of Labor Statistics. The 2011 high, $50 is now worth 100 fiat Fed notes in 2020 fiat Fed notes value. So, I mean, the triple digit silver thing, I think, is a given. I think that's coming. But the question is when, of course. And no one knows that. Go ask God or omniscience.
Pray or ask Jamie Dimon, which might be the opposite of that, although I'll try and be nice and civil here. Sure. All right, I'm going to try and get caught up here a little bit. Love the show. Appreciate SD Billion's last 2 videos. I like that. Maybe, James, are you one of the Hunt brothers? And who knows, maybe since the Hunt brothers just won the Super Bowl, they'll take some of that revenue, pile into silver. But yes, James, you have been doing some great videos. Jane is saying hello from France. Jane, I hope you're having a wonderful evening there. Thank you kindly for joining us. He appears very arrogant. Hopefully that's directed at Musk or a banker rather than us.
I think that's what that was.
Winslow says overnight. I think a lot of these things, whether it's the Tesla going up or, whenever the metals go up, I do believe it's been forced into an environment where it's going to have to be somewhat abrupt, like the housing bubble. 1954, let me see, 45 ounces silver, 1 Tesla paper stock. I think I can make that decision. I agree with you there, my friend. Last night, Tesla was at 780. James says, crazy price. Give me metals all day long. Well, James, again, is over at SD Bullion, so he can help with that. Dennis Burton says, silver is cheap. Load up while it lasts. I do agree. I know we've been trained as Americans to adopt this momentum-based buy high, sell low ideology. So I think, Dennis, that's going to serve you well. Jay mentioned crypto is manipulated. We talked about that and do agree. Silver is God's money. Interesting. I'm reading the Bible again, and silver is mentioned a lot more than Tesla stock in the Bible, for what that's worth. If you don't own it, you don't. If you don't hold it, you don't own it. Correct. What good is technical analysis if markets are manipulated? I agree with you there, Frank David. Although perhaps, again, I'm not saying that there aren't people who can do good technical analysis, just because I may not have been sold on it yet. Maybe one way of looking at it is that if you know that everybody's looking at this metric and that's how they're going to act, can you game that? In that interview I did with Bart Chilton, I actually asked him about that was some of the stunning things that he said there, one of which was that he did agree where the banks know where the stops are, the high frequency algorithms, and that they're gaming that to a degree. So I agree with you. Gabby, is this live? Playback speed 1.5, please. It is live, although if you want to check back in later, I do listen to my YouTube on double speed. So whenever we're done and it's posted, I think you can do that on the YouTube live. So Burkhart, maybe silver will be manipulated for the next decade or even longer. I agree that when you think about it, if really the Western system of government and finance is based on printing money, you know, it does make sense why these things go on for so long, because there's a lot of energy based on that. And Phil, would you like to comment on that one, of how long, whether it can go on for a decade or longer?
That what can go on for a decade or longer?
The silver manipulation.
No, I think all frauds come to an end eventually. You know, we got one of my subscribers over here, Dave, saying frauds take a long time to develop and one day to go boom. I'm pulling up the Enron chart here on my side. It looked like it rushed up to $90 a share, and then just in the span of a few short days and weeks was zero before anyone knew it. That's the part that kind of frustrates me from a standpoint of an armchair Austrian economist and forensic accountant and fraud examiner. I mean, just look at all the red flags over at Tesla, the tone at the top, the old story, you know, people were afraid of Jeffrey Skilling over at and Kenneth Lay over at Enron because, you know, they wield a lot of power. And on top of that, you've got all these CFOs going in and out. So bottom line is all frauds eventually come to an end. You know, if we wanted to go visit Butner Federal Penitentiary in North Carolina, we could talk to Bernie Madoff and ask him about that. I almost said Bernie Sanders, who, by the way, was also a victim of fraud last night. Anybody who paid attention to these Iowa caucuses. But anyways, yeah, all frauds come to an end. And I think that's the benefit that we have here, as long as we're patient. If we can be patient and continue to stack silver, then we'll be the beneficiaries, unfortunately, of that artificial suppression in the long run. You know, one of the other things I wanted to share here on my side, somebody pointing out today that there is a middle school investment class that has $100,000 they've managed to accumulate over the course of this bull market that has exceeded all bull markets. And what they decided to do last night, this financial advisor got a call from his nephew, and they're doing a stock picking project at school, and his group took 70,000 of their 100,000 and bought Tesla at the close. If a group of middle schoolers who have never bought a stock in their lives are backing up the truck, that might be something to think about. So yeah, all frauds come to an end. The Tesla fraud will eventually end, and the suppression of gold and silver will eventually end, and hopefully we'll be the beneficiaries of that.
I agree. Again, I think it'll be sooner than later, as it's nice to see so many folks here have an interest in that. Really, it can continue on because it's kept secret. I always wonder what would happen if some of these guys running funds and on Wall Street were actually aware, which is why I have a book coming out on this topic shortly, because I remember back to my Wall Street days where it's just what you're trained not to look at. So I do think it's going to come to an end. We shall see. Apologize. We're getting a lot of comments here, which is wonderful. I don't know that we'll get to every single one, although Gabby has a question. Looks like she'd really like answered. Should a person sell all their silver to get out of debt and buy as you go every month? James, what do you think about that?
Yeah, if you have consumer debts at high interest rates, get out of that stuff. That's if you're paying consumer debts to like Visa or MasterCard or any of those usurious credit card companies, stop paying that. Pay that down. Don't pay those people any extra currency than you can get away with. You don't want to have consumer loans if you can avoid them. Robert Kiyosaki talks about using debt intelligently, and I think that's key. Is debt can be helpful. It can be like a sword. It can really make you powerful in some ways if you apply it intelligently. But if you're using for consumables or things just to stretch and pay the bills, et cetera, well, you're going to have to figure out a way to get out of that trap. That's not a good way to live, because if you do the math on it, you'll be paying about 30-40% more for your entire life than someone else who's not in debt. So yeah, that I would suggest certainly don't have consumer debts if you can avoid them.
And Phil, you're the financial counselor, so any thoughts there?
Yeah, one of the things that most Americans don't do is a monthly budget. My wife and I have done one for years. We've had our ups and downs because many times it's not fun. I'd probably prefer a trip to the dentist, to be honest, but it's a necessary evil, because on this very one thing, Dave Ramsey is right. You really should spend every dollar before you make it, because you're going to succumb to the temptation of, oh, hey, let's all just go out to the movies. No one ever thinks like, hey, have we really saved enough this month and invested enough to do that? And nowadays, before we even get to the concessions line, for the Kennedy family to go to the movies, it's $50. So everything, the Neil Kashkaris of the world will tell you there's no inflation. He's lying through his teeth. But average, ordinary people see it each day. So that would be my first recommendation. Get down with your loved one, pencil and paper, write down every expense for that month, and see what's left over. And maybe you'll be surprised to discover there's a lot left over, but you've never been able to sack it away if you didn't plan ahead. And that would include, as I said in my free ebook that folks can get on my website, philipkennedy.com, that would include buying physical gold and silver from places like SD Bullion, right? Stack every month, dollar cost average, take advantage of these low prices, and maybe you'll have something to show for, fighting traffic every day to go to a job that you may not necessarily like, to potentially one day retire with dignity.
Well, appreciate that, Phil. Joe Costello, I apologize for my phrasing. He mentions the Bible for what that's worth. I didn't by any means mean to downplay that. Factor in, I'm just reading the comments as we go along here, also not trying to impose my spiritual beliefs on anyone. I do like the Bible, thoroughly confused by it at times. So apologize for that phrasing, didn't mean to upset anyone. Although an interesting comment here, Gabby followed up. She mentioned that some of the debt is for business loans for houses that she rents out. And Phil, before I toss this over to you, I think it's an interesting situation. Now, on one hand, for anyone who gets into the metaphysics of such matters, I think there's something probably not too healthy about dealing with these banks and getting in debt to them. Although simply from a numerical standpoint, I would wondered if I were going to buy a house today, which I wouldn't, especially at bubble prices, yet it's an interesting question. Would you want a shorter term mortgage, or would you want a longer term mortgage where essentially if the government is going to print their way out of the debt, you do get that advantage of paying the longer those those payments go out, you're paying in inflated dollars. So again, to be clear, I'm not saying go load up the credit card yet. There is that factor. Phil, is that making any sense what I'm saying there?
Yeah, I had a question just the other day on Twitter. Someone posed the idea, if you had $180,000 cash, yet had $180,000 mortgage, what would you do first? Would you pay off the mortgage, or would you buy a couple of rental properties? And my answer was, with these artificially low interest rates and a lack of courage to raise them, I'd just buy the properties. Now, in an ideal world, that's not the right answer. The right answer is the Dave Ramsey answer, which is to stay out of debt. But we can't do that anymore because the U.S. government and the Federal Reserve are committed to a hyperinflationary depression at this point. So I'm now espousing more the view of a Rick Edelman, who literally, his mother's mortgage was paid off, and she had like a mansion because he said the amount they took out. They mortgaged the house again with a jumbo loan and then invested that. And he was telling me this. We had him come speak at a local conference here in Northern Virginia. He was telling me this in like 2010. So he probably made his mother a ton of money by leveraging her house at 4% over the last 10 years. And unfortunately, that's what I would personally do. And that's what I am doing, because this is a fool's errand to try to compete with the Fed. I mean, if they're talking about NERP and more QE, then you're going to get in trouble trying to fight the Fed. So I would probably, in that situation, just buy the rental properties. And if they ultimately do have the courage to raise interest rates because they realize that they have started financial Armageddon, then I would just turn the keys and walk away like everybody did in 2008. That would be my plan.
Yeah, and again, Phil is a financial counselor. So, Phil, in case anyone has any questions or would like some assistance with that, how do they reach you?
It's real easy. They can just go to philipkennedy.com. That's Philip with one L, Kennedy.com. All this stuff is outlined in my free ebook, Financial Judo. But if they want to shoot me a question, they can just do that by sending me an email, phil@philipkennedy.com. And I'm answering questions all the time. Again, I'm not a financial advisor. I'm a counselor. So most of the questions I get are related to the emotions of money. And believe me, man, when we're dealing with a 10-year bull market and all of the malinvestment and misallocation of resources that are out there, there's a lot of emotions surrounding money. And you can see it today in the Tesla chart. So hopefully I can be of assistance to your viewers and listeners.
Well, I appreciate that, Phil. And let's see, we had Mark Gibson, Mark, sure was a pleasure to meet you in Vancouver. Apparently we have one thumbs down on the video. He says it's from Elon Musk. Rich James, that reminds me of the last time we had you on the show. We had, at one point, it was like 150 thumbs up to one thumbs down, and I was wondering if that was Jamie Dimon watching, or maybe Blythe Masters was coming out of her cave. Although I'll be nice and not be too much of a smart ass today. Rob P mentions, yes, I settled a few of them. I'm assuming he's referring to debt with prayer. It was amazing. Thank you for that, Rob, as something I've been thinking about lately. And again, won't go off track here, but appreciate hearing that. And folks, it's coming towards the top of the hour. I guess we never set an end point on this one. James and Phil, if you guys need to run, by all means, I think I'll go to 10 or 15 minutes after the hour. And if anyone has any questions that they'd like answered that did not get answered, fire them on in there.
Yeah, that's fine with me, Chris. One thing I wanted to suggest on the credit card stuff. I mean, I use a credit card when I place orders. If you're a first-time bullion order, using a credit card is probably your smartest thing, especially if you're dealing with a dealer you've never dealt with, like an online dealer. Credit cards company is going to have your back if that online dealer doesn't actually deliver. So it's always a safe play to use credit cards on purchases. It'll be a little bit more expensive, but if you're just doing test orders, it's certainly a smart tactic. And as far as credit card debt, you just pay it off every month. You never let the loan go over, to the next month. And by doing that, you never have to pay them any of their usurious interest rates. And if for those that don't know anything about credit cards, by the way, we used to have laws in the United States against usury. It's called usury laws. And they stripped those down when they financialized our system in 1980. That's why you have Delaware mainly and North Dakota are the places where these companies are based out of. But it was all stripped down so that people who own shares in these banks could make more profits, and that's fine. But that's why we're at a situation now where we have mega rich people and other people in the vanishing middle class, and people who are poor who have very little in terms of financial services. So that's essentially what you're looking at. What the repercussion of that, the stripping down of our society in the last 50 years.
Yep. And Phil,
go ahead.
Phil, I didn't
well,
know
and then coupled with that, guys, is a total lack of financial education in our government schools. I mean, Robert Kiyosaki talks about that all the time. It's almost like every American has been designed to get ripped off between the usury, as James was alluding to there. And I mean, no one ever taught me to balance a checkbook. And I took accounting in college. No one ever talked about it there either. You have to learn all this stuff on your own. So there's definitely a market for basic financial skills out there.
Yeah, I certainly agree. And did either of you guys need to hop out yet, or want to go another 10 or 15 minutes?
Another 10, 15 minutes because I was so late. I have no problem putting that in.
Okay. I got a question here from one of my viewers, if you don't mind me sharing it, Chris. It comes from another gentleman named Chris. He's asking, what do you think about the supply chains already being disrupted in China because of the quarantines? They're saying that this is going to be a multi-trillion-dollar incident when it's all said and done in terms of the lack of economic activity. What do you guys think about that?
James?
Yeah, I don't see how you can shut down like flights inbound to China, like across the board, and people not move around in the major metropolitan cities in China for months. Okay, I don't see how you can do that and not have repercussions in terms of the global, the GDP. The all important GDP numbers. I mean, that we've designed a system where we think that that's reflection of progress for humankind, and I think we all can agree that's asinine. But I think there's going to be repercussions, and this could be the black swan that kind of makes the global recession occur.
Yeah, interesting you mentioned that, and a good question, Phil. One first thought, I thought it was odd that the Shanghai index was down 8% yesterday, and I looked in the morning, I'm like, gee, I wonder what's happening to the U.S. markets. Dow Jones up 350 points. And I'm going to go with Plunge Protection Team or one of the other gangster squads. As Joe Costello mentions, banksters equals gangsters. Yet, perhaps first of all, sending warm wishes and thoughts out to anyone who's affected with the virus. I don't claim to be any sort of expert about that, although it is certainly concerning seeing how things are getting shut down, where I saw colleges are getting closed until March. And, somehow that's what made it sink in where, I guess when we were kids and going to school, and if there was a snow day, it was great. Yet you think about businesses being shut down, and certainly I have a great appreciation no longer working for a corporation, doing something entrepreneurial that can have quite an impact, like James said. So hopefully it doesn't continue getting out of hand. Although interesting, Rolf Steiner mentions, probably right, like Weimar Germany, a hyperinflationary depression, which leads me to something I've thought about where, people often assume that when the dollar goes down that it's complete apocalypse, Armageddon, and we're shooting each other in the streets, which may well be, who knows, yet I've thought about that a lot. I wonder how much of that is engineered fear by the government, where I think of it sometimes it's like the slave versus slave masters, where the slave master, he wasn't building any of the stuff. And if one day these guys are getting beaten up, realize, wait, if we throw this guy in the ocean, we're still making these things. And along with that, hearing a lot of the Austrian scholars talk about, even back in 2008, I remember being surprised when many of them would mention that if you really let the free market function, things can heal quicker than we would think. Obviously, if you have a contagious virus, that's a different element. Although, and I'll throw this over to you in a second, guys, if you have a comment on it. But I mean, let's say the dollar did go down, and it was like a 2008. And maybe the first thing that pops to my mind, hey, are we still going to be able to get food from the farms into the store if, credit lines are blowing out, distributors are blowing out? Yet, just crudely thinking about it, well, if people are sitting there really hungry and unemployed, I would think the free market would allocate those resources where it's like, well, I'll go drive the truck, or I'll, help use my free time or labor to find energy to get food from here to there. So I wonder if it, more comes down to how we view things and how much of our own sovereign power we take back in a situation like that. Phil, how about if you have any comment on that? Why don't we start with you?
Well, the reality is, I think we're already there, and it's just covert because a lot of these folks receive food sustenance through their SNAP cards. We don't have people lining up like we did during the Depression. And when you discover that most Americans don't have $10,000 saved for retirement, and many Americans don't have, $700 saved for an emergency, then to me it says that we already are in a pseudo depression. It's just been masked by a lot of this modern technology. So, I think that they've been good at kind of keeping it covert for quite some time. But as I pointed out there earlier with that Dow gold ratio, if they could have made it go, like, let's say back during the internet bubble, if they could have made the Dow gold ratio go to 100 or 1,000, they would have. But these schemes eventually run their course. So we had it 40 in 2000, and then it fell all the way down to 6, and now it looks like it's topping out at 22, and it's going to go to 1. I'm convinced, because they can't hold back the laws of economics. And unfortunately, a lot of people are going to suffer, and that's why many folks say, look, if you're just an average person, maybe it's better to invest in a long-term food supply or things you're going to need in the future. And I'm kind of a proponent to that idea. Just in case I don't get another chance to talk, because I know we're signing off here, I just wanted to get your feedback real quick. As we're on this theme today of all frauds eventually coming. I'm just wondering what we're going to name the Tesla documentary after the company collapses. When Enron collapsed, and this was near and dear to my heart, guys, near and dear to my heart, because I lost my first job at an internship with Arthur Anderson. And then the documentary, The Smartest Guys in the Room, came out. I got to learn a valuable lesson. I think I'm older than a lot of the young folks that are buying Tesla stock on their Robinhood app today. They're going to unfortunately learn this valuable lesson too, and hopefully carry it with them through a lifetime and understand that, hey, companies actually have to make a profit. They have to report real financial statements, materially free of fraud. So I don't know. What do you guys think?
Well, I think I have a book that I'll be finishing up. Hopefully today we'll get a little closer, called The Big Silver Short, because I see the whole thing as like The Big Short Part 2, especially focused in the silver market. Once the book's out, I'm going to hope someone out there knows or can help me, or I can figure out how to adapt that into a movie. Phil, we'll have you as a character in it. James, you as well. And with that said, James, any other response to what Phil just mentioned? Do we still have James there?
Sorry, yeah, the Tesla thing, I'm going to stay off. Just I want to approach back to the gold and the silver situation. I mean, people have to remember that in 1980, when gold got to 850, we could have gone on the gold standard for about a year during 1980, during that time frame, because the amount of gold that's sitting in the U.S. official reserves was valued enough to fully back all the fiat currency, all the fiat Federal Reserve notes M1 supply. I believe that's the M1, or it could have even been M2 at that time. And I basically believe we'll go back probably toward that. It may just be 40% at this time, or it could go back to 100%. But the 40% threshold is roughly around $4 grand, and the 100% is roughly around 10 grand. And so how we get there and the methodologies, et cetera, I mean, we've been there before. In 1933, it was 40%. And they jacked the price of gold from $20.67 to $35, and that was not enough. They should have gone to like 50 or 60 bucks an ounce. And since they went so low, we had to live through 10 more years of depression because they fixed the price of gold way too low. And we learned that throughout the London gold pool failure in the 60s, when all the gold was flying out of the United States, to 1980. Look, when this happens, you can have depressions, you can have issues, but I don't think people are going to be, dying in the streets. 1980, that wasn't the case. It was just a very inflationary environment, and people were losing faith in the fiat Federal Reserve note and whether or not it was going to be the unit that we all use so much today, and it dominates essentially the world in terms of trade. So whether or not we're going to have a situation where it's like Mad Max, I just don't think that's the case. I think what you'll end up seeing is like a melt up of all things. Stock market's melting up now, and at some point gold's going to start accounting for this, and they'll meet somewhere. Like Phil says, the Dow gold ratio was 1 to 1 in 1980, and we'll probably see that sometime later this decade or into the next in the 2030s as commodities start to melt up and account for all of the rigging. They've been rigging the inflation data since 1980. There's a reason they've been doing that. It's to underpay people in Social Security. It's to lie and cheat people slowly but surely, decade after decade after decade. At some point, the average people of the crowd, the actual crowd, will realize how badly they've been lied to for 4 or 5 decades, and they're going to start rushing to things that have actual value instead of these Fed notes. So I'm just waiting to see that happen. It's going to probably happen the next decade or two for us all.
Appreciate that, James. I don't know if you see me chuckle every time you call them federal fiat notes, which even in your incredible videos, which I love watching, always makes me smile and takes my mind off of the insanity. Folks, we're about to wrap up here. I apologize if I didn't get to everyone's question, although sure appreciate everyone who joined us, including Phil and James. If I may leave my parting thought here is that as tough as things may be, I really appreciate what James mentioned there. I remember a few years back when Greece was going through their economic struggles, there was this town in Volos, Greece, where they simply couldn't afford the euro anymore. And they developed what they called the TEM, which was a local currency they were using in the market square, which, hey, maybe it's not going to replace gold or silver yet. The degree to which they wanted to eat. This guy would bring the bread. This guy would teach the dancing lesson and actually trade and barter. Actually be fascinating to go and visit Venezuela and see how people are coping with that there, where you have the unfortunate effects of government. But I do like to think that it comes down to how the people like us and the people watching and the people who just really want to live a good, honest life respond. Because as much money and wealth as some of these banks have, remember that you're the ones out there going to work, creating things each day. And whether other people are always ready to hear it or not, I think we have more power than we realize. So that said, James and Phil, perhaps if you guys just one last time mention where folks can find you. I sure appreciate you making some time to do this today. And we'll look forward to doing this again. So Phil, and in closing, where can folks find you?
Folks can find me over on Twitter at Kennedy Finance. I am tweeting often because I'm just so disgusted with everything that I see out there. But we will be rewarded one day. Folks can also find me over at philip.kennedy.com. Get the free ebook. And for folks who like Chris's channel and haven't subscribed to mine, please do, because YouTube doesn't really promote stuff like this organically. Just look for Philip Kennedy Finance on YouTube and hit that subscribe and notification button. And I'm putting out content nearly daily, including a music video tomorrow where you might see a cameo from Chris himself. So be on the lookout.
What about Mr. President there, Phil?
Yeah. Well, I think something's going to happen tomorrow, so it seems like an opportune time to put out that video. So folks can check out that world premiere tomorrow night at 8 o'clock. Those are the 3 places folks can find me.
it is a great channel, and I will also confirm and recommend folks to subscribe. You do some great things there, Phil, which I'm grateful for. And James, who also does some amazing videos. I wish you could be I've added to my wish list. I want you as host of 60 Minutes and editor of Wall Street Journal. Although until we get there, fortunately, you already have a channel that I think is more useful and beneficial than either of those two. And
I'll pass on both those offers. And most of the people head to those people. Just look at Paul Craig Roberts. I mean, that guy is about as cynical as it gets. I hope I don't end up in that type of attitude. But look, people out there who are losing faith in silver, just remember, silver, the physical silver market, ultimately is going to have a say in a spike in value. And you only have about 60 some odd, 75 billion fiat Fed notes value of silver bullion that's sitting out there. And that's nowhere near the burning that silver has as a monetary instrument. Okay. So when gold goes up exponentially, people are not going to want to pay that much for gold. They're going to go to silver, and silver is going to gap up. And that's basically my tenet. I think everybody here would agree that's on this video. So you can find my work at sdbullion.com/blog or at sdbullion's YouTube site. And every week I make a video pertaining some factor to the precious metals industry. And so come check it out. It's all free stuff. So that's it. Thanks for having me on the show, Chris.
Thank you kindly, James. And one last thank you would like to go out to Gabby, Tom, Tony Cardoza. Tony, nice to see you. Rolf, Joe Costello, Rob P, Albert, Patriot, Tom, Silver Fan, Italian G, Scott Richardson, Rob. I'm getting some of these twice. One Woke World. I do see all of your kind comments. Silver Fan, and everybody else who was on there today. I hope this was helpful to folks. It was fun doing it. And leave any comments below in the video field. And if you find it helpful, we'll do it again. Phil, thank you. James, thank you. And just appreciate you all, and hope this was helpful to you. So with that said, we'll sign off and see you again soon.
See you later.
Bye.